Good.
So first and foremost, since you already got a box, we're not going to put them in the box, but I wanted to present to you. You're the second person ever to get this. This is a limited edition designed by Sal sports bra that's mortgage-well branded, that we expect lots of selfies to be taken in.
I love it.
Workouts. And also one of the very first Sal creations, a custom bottle that lots of pre-workout and the water should be drank out of.
Cool.
Yes. We've been giving our friends and family and clients and realtors that we love a little bit of our merch to make sure they have some Mortgage Bold swag. So thank you for being part of the Mortgage Bold family. Thank you for coming today and always supporting us in one way, shape, or form.
Thank you.
We appreciate you.
Appreciate you too.
So let's hop straight into the meat and potatoes of Sabrina. So tell us about Sabrina. Sabrina is a real estate agent with RESF. When did Sabrina start her real estate journey?
I started 5 years ago. Has it been 5 years? Yeah, it's been 5 years.
So 2019.
2019, correct.
Okay. So let's go back to 2019.
Yes.
What happened?
I was about to graduate from FIU and I had part-time jobs, and when I had some money saved, I thought it would be a good investment of time to get the real estate license and try to, while I'm working on several other things, try to make some money in bulk. I didn't expect to do it full-time until actually after the pandemic I started doing it full-time. And I fell in love with it. It's a learning experience, and you start small and you go big.
Yeah. So you started in 2019 with RESF, or did you start with a different brokerage?
I started with Keller Williams for a month. As much as we all love Keller Williams, the split is not very favorable, let's be honest. And I was RESF.
So why RESF? What attracted you to their brokerage, aside from the split?
Oh, the marketing. They're number one in marketing. The broker is president of the Florida Board of Realtors, so he has massive influence and somewhat control over the MLS and the associations. Great from an education standpoint, great brokerage. Of course, the splits, if you perform well, are amazing. And any listing that we have, they for sure, we have professional photography that's on staff that represents any listing that we have the opportunity to have.
Yeah, nice. So a combination of support, but also like expertise and connections in the market.
Yes.
Nice. And you are a little bit unique in real estate, at least unique to my audience and to people in the residential world, is that you do a lot of commercial real estate, right?
Yes.
And did you start your real estate career already starting with commercial real estate, or did you start with residential and transition over?
I tried to work with both. So the first year I did do my first commercial transaction, and then that just escalated. And
what I like about commercial is that it's a little bit less competitive. It's more research. You have to pay for the software. You have to be affluent with CoStar. You have to be affluent with LoopNet. You have to use Biz by Sell if you're going to sell a business. If not, then why are you selling it? The MLS is not going to cut it. And when you're searching for people, the MLS doesn't really cut it either, because you want to actually give them access to everything that's actually on the market, which is on CoStar and LoopNet. And now Crexy, which is a new platform too. I like the tech more than anything behind that, and the analytics. And when you run into a buyer, usually the buyer is extremely motivated and is not going to waste anybody's time, and is usually very financially equipped, which is all you should make time for in this industry.
Sounds like you had some time wasted in the past.
Instead of doing favors for people, the best favor you can do for them is actually study and do your homework before you get in your car and go out there and do showings.
So tell me about the first commercial deal you did in your first year, because that's unique, is that you didn't get into commercial, you already started in commercial. If you did your first deal in your first year, I would say that's starting in it. So tell me about that first deal. How did that go for you? What was that deal?
It actually simply started with advertising on Instagram. My first restaurant that I ever sold, it did not include the real estate, it was just the business. A friend of mine had the listing and was like, hey, advertise on your page. The owner wants to sell. He's willing to give 50% off of the price I have it up at. So I advertised that, and My friend bought it and we closed in 3 days. That was a miracle story. But again, the restaurant was in Bay Harbor Islands at 80 grand. The lease was only 3,500 a month. The kitchen was shiny, perfect, hood, grease trap, everything there up to code. And yeah, it was very successful. And then I helped him sell that restaurant 2 years later for $225.
Okay. So if they're not buying the real estate, what are they buying specifically?
Every business has its own niche as to why it can sell. Retail businesses, unless they report their financials, typically do not sell unless there's construction work and permitting work involved. Like restaurants, a majority of landlords do not want to contribute to the build out of a restaurant. So a lot of times, instead of speculating on the financials, they see the value in the build out. And that's really what sells, because a majority of the time when a space is shell or empty without anything, for them to go through the process of getting that hood, getting that grease trap, getting that liquor license, or getting that beer and wine to COP, they don't get to open for at least a year and a half.
Yeah.
And by that time, they have to start paying rent if they were lucky enough to get rent abatement or rent abatement, meaning rent for free for X amount of time while you're doing or you're putting in work to a space that's technically not yours. So it's always better for, if people can buy, that's a better option.
Okay. And in terms of the financials of that deal, you mentioned that it was sold for $80,000, a lease of around $3,000 a month, or
$3,800 a month.
Okay.
Actually.
So how does a commercial agent get paid in these transactions? Is it similar to residential?
Very similar to residential, since it all depends on how the listing agreement is signed and executed. Typically, they actually get paid a little more on business sales, because business sales are they're harder to, you can't expect it to sell at a certain time. It's not housing that's by the square foot. The time of urgency when somebody's business may or may not sell, it depends on several factors. So typically it's 10%, and usually the buyer's agents get 5%.
Okay, so instead of 6%, 3 and 3, it could be up to 10%, 5%.
Yeah.
Okay, gotcha. And you started with that commercial kind of relatively small deal, and then it seems like from following you on social media and knowing you, you've dived into different parts of the commercial sector. Most recently as well, and something that we've talked about just a little bit here and there, is that your FedEx business or your FedEx client, who they buy something called routes you were telling me about, and there's like the trucks associated and value to the routes. So to you, this is all very straightforward and understandable stuff, but to me and probably to 90% of the people that are watching this, they have no idea what's going on with, like, how do you sell part of FedEx? Are you working with FedEx? So can we break this down for a minute or two and talk about what does it mean that you're working with somebody to buy or sell a FedEx business?
So a friend of mine wanted to sell their FedEx routes, which what that means is I'm not selling FedEx itself. I'm selling a contracting company for FedEx, that when you see these trucks deliver, drop off and pick up packages, it's owned by a contracting company under FedEx. So you can view it in the lens of, not every McDonald's is owned by McDonald's. It's usually owned by another company. They're all independently owned.
Like a franchisee.
Yes.
Mm-hmm.
So with this chain has been around for over 14 years. So I was able to obtain the business itself, not the borrower. I was able to obtain the business a pre-qualification letter by the SBA. If a business is financeable by the SBA, which it all depends on how they report their income, what collateral they own. Like this company, this contractor owned all 43 trucks green clear.
Yeah.
That's a nice chunk of goodwill or collateral within the business that doesn't have to do with, a lot of people buy businesses based off of the profits that they're making. Besides the profit, there's the hard collateral that they have.
Yeah,
So why, at least this model is easier to understand to sell, is that there's a market of businesses that are perfectly sellable. We have private equity companies, family offices that typically buy these type of assets that don't always always include the real estate, but if they're proven to be financeable by an institution, they're pretty much a safe net to add to someone's portfolio. And with FedEx, not many people know the metrics at what each route sells for, but depending on the zip code, depending on the density and the amount of stops they do per day, each route can easily go for $100,000. So we have 43 routes. That's why we came up with the price of $4 million.
And are
And
you the
we got
one?
that qualified at that.
Are you the one helping it get qualified, or is that the responsibility of the buyer or the seller, I guess?
I help them get pre-qualified because a lot of people, they can own a multi-million-dollar business and they don't know the steps as to how to sell their business at the highest and best price. So I help them get that evaluation so they know.
You would reach out to what documents they might need, the application process, things like that. Gotcha. And I imagine that's not something that every commercial agent knows how to do. Or
They should if they're involved in the financing.
Yeah.
Because it makes their life easier. You can see what's going to happen and what's not going to happen and what's going to take a very long time to wait around for a cash buyer, for somebody that has outrageous expectations as what they could sell their business for. If you do things correctly, you don't waste a lot of time.
Yeah. And how long does it take to get a business approved by the SBA?
A week.
So it's pretty quick.
If they've been in business, they have to have been in business for at least 3 years for the most part, unless there's a specialty bank with different requirements. And they have to report a certain amount at the very least in order to qualify.
Gotcha.
Some banks consider add-backs depending on the assets the company owns. If you own that fleet that I just told you about, the fleet itself of the 43 pickup trucks is worth at least $750,000.
20,000 a truck, yeah, makes sense. So if the business would not qualify by the SBA, then the buyer would then have to source their own financing, which in your experience can be tricky.
Then the business may not be worth listing, honestly.
Really? So if it's not through the SBA,
If it can't be qualified by the SBA, it's just going to be, you can try listing it. There's the cash market from EB5 investors that to get a visa in this country, to get a green card in this country, it's a minimum of $800,000 to get that. Am I right or am I wrong?
I know there's a threshold. I can't lie and say I'm fully aware of the process or the amount, but I understand what you're trying to say. It's a certain amount of money they have to invest.
Yes, and the business itself has to have at least 20 employees. The business also that they're purchasing has to meet a certain criteria because in essence it's, I'm coming to this country and I'm creating 20 jobs. So that's why that incentive of the green card is offered. But there's that market as well of people that buy businesses for that reason, but it's not as predictable as the things that are financeable do get bought, like a home gets bought. It's just you can predict when people need to relocate. You can't always predict when somebody needs income. But during times of right now with the election going on and so forth, there's actually more of a market of people wanting to make money.
Yeah.
So if something makes money, and it's financeable, it can easily be, not easily, but it has a market for being sold.
So is the commercial market and the residential market following the same trends these days, do you think?
I think it all depends on the area. I think every pocket is entirely different. Some parts of the residential market have slowed down tremendously. Overall, I feel like it has mainly just stabilized. Right now is a great time for people to get a good deal. And the sellers that want to sell right now are serious about selling.
Makes sense. We were talking earlier about the market and getting a good deal and stuff like that. And when we're filming this, which is in August of 2024, interest rates are not the highest they've ever been, but they are relatively high in relation to the pandemic and 2022 and stuff like that. So how do you see that in a positive way in terms of like negotiations and opportunities for your friends who are looking to buy? When you're telling them, hey, it may be a good time to buy, are you seeing any benefits to purchasing real estate currently?
I think buyers right now should take advantage of the fact that they may be able to have less closing costs, have less of a down payment, less money up front when they're buying. because if properties are sitting on the market a longer amount of time, a seller should be more incentivized to maybe give you a credit back at closing for anything that you don't like on the inspection. You're not competing in a cash war like we saw during the pandemic when rates were so low, when money was cheap.
Yeah.
By money is cheap, that means rates are low, as well as the fact it's not just that rates are slightly high right now. They're not even that bad when you look at the historical data. But what's really taken into effect has been insurance rates, which insurance rates and properties not being insurable and us having to factor in that, that's what has given that inclination of these mortgage payments. But I still think for the market of buyers that are hungry to buy under 500 grand, now's an excellent time to be that buyer, because your property's more than likely not going to depreciate. It's probably only going to go steadily up in value.
Yeah.
It's better than renting because your payments are going to be just as much or less of your rent, and you're building equity, you're owning something, and you can actually get possibly $10,000 to $15,000 back at the closing from the seller, because a lot of sellers that have their properties out for over 2 months on the market in the $400,000 range, they're willing to do that.
Yeah.
And that saves buyers a nice chunk at the closing.
Yeah. So essentially, what you're saying is because of there's not as much intense competition, you're able to potentially get a better deal in this kind of buying environment versus in an environment where rates are potentially lower but competition is higher.
People were paying 50 to 100 grand over asking. Now, it's not terrible to pay asking price if the property will appraise, and on top of that, you're getting 20 to 30 grand back. Not 30, but you're getting 10 to 15 grand back, sometimes 20 back at the closing. So you basically don't have closing costs, you barely have a down payment. You know, you're paying less than first, last, and security on a lease.
Yeah.
So you have to factor that in, and I would say if to not just focus on one property, to try and really see the market. When I work for a buyer, I show them 10 to 20 homes in a compressed amount of time, like we do this in 2 weeks, and then I try to write like 3 offers and see who gives them the best terms, because now is the time where it's more about who's buying it and not who's selling it.
Yeah. And a decrease in competition also means you get more opportunities to get also what you want too.
Yeah.
Versus having to settle sometimes.
Exactly.
Right? Because I think a lot of people, when competition was high and rates were low, they were having to settle for either different buildings than where they wanted to be, different amenities than what they actually wanted, because they simply weren't able to obtain exactly what they wanted, even though they were offering above ask prices.
People were literally putting addendums that they had to, at the time of the pandemic, give $20,000, $30,000 over appraised value to get the house.
There was no negotiation for any inspection credits once the inspection came back.
Yeah.
Appraisal credits once the appraisal came back. So you're stuck, right?
Yes.
Yeah. And sometimes too, when you take a look at what 30, 40, 50K extra translates to monthly versus having a lower rate, versus having a higher rate, a 500K house at 4% interest versus a 600K house at 6% interest might be the exact same monthly payment.
Yeah.
Because it's just you're paying more for with the lower rate. So sometimes it's important to also map that scenario out for the borrowers too and say, here's why a higher rate might actually be cheaper for you versus a lower rate at a higher price in the future.
Yes.
And helping them kind of project what it means to wait, because I feel like as professionals, it's our job to quantify what the objective is going to be for our buyers instead of just letting them say they're going to wait, because if you're going to wait, it's okay for what? For the rates to be 5%. Okay, makes sense. I'm in agreement. Let's do that. But then can we also extrapolate the purchase price, how that's going to change today from when the rates are 5%?
Yeah.
And you can extrapolate that, Mr. Borrower, and you tell me what you think. And obviously they're going to be logical, and they're going to say the price is 500K today. It's probably going to be 600K when rates are at 5%.
Yeah.
Over time and because of the rates. Okay, well, what's the monthly payment in those two? Oh, the exact same? So would you prefer to pay the same monthly payment but then be put in a position where you have to wait and you have to compete? Or why not pay the same monthly payment now, get credits like you were saying, and be able to realize the appreciation for the whole year while you wait instead.
And you can always, if your property drastically goes up in value, like we saw during the pandemic, you don't have to sell if you don't want to. You don't have to, even if it's tempting to do, you can just buy down your rate later on when rates go down. You're not tied into your rate for the most part unless you have an ARM, correct? Unless you have anything that's an ARM is typically not to the buyer's favor, right?
An ARM is just an adjustable rate, doesn't mean it has a prepayment penalty. So you can still, you're not tied to anything, it's just the rate's gonna change at a certain period. It's gonna adjust after 3, 5, or 7 years, but it doesn't really tie them to the loan. So they can still sell whenever they want.
Oh, okay.
You're thinking of like a prepayment penalty. Does the loan have a prepay, which means you have to hold it for 5 years before you can refinance or sell it, or else you pay a penalty.
I thought that the ARM only adjusted when the rates increased. If you got a loan with an ARM, then when the rates drastically go up, it ties you into that.
It's a great talking point. An ARM is like stands for adjustable rate mortgage.
Yeah.
And it's usually a 3-year, a 5-year, a 7-year, or a 10-year ARM. And what do those years represent? Those years represent the amount of time the loan is not going to change. So if you get a 3-year ARM, whatever your rate is at the beginning is going to stay like that for 3 years, or 5 years, or 7, or 10. So that's when you're solid. You're not worried about the market whatsoever. If it goes up, down, left, your rate's going to be what it is for the initial 3, 5, or 7, 10 years. Then after that, for the remainder of the 30 years that you have on your mortgage, so whether it's 27, 25, 23, or 20 years, then the rate will fluctuate with the market. And if the rates are higher, it'll be a higher rate. If the rates are lower, it'll be a lower rate.
Oh, okay.
Right.
No one talks about the sunny side.
Exactly.
Okay.
It could be
Oh, it
lower.
could match the lower rate.
It could
Okay.
be lower, yeah. And the benefits of an ARM is typically you usually get lower than market rates up front, and then but there's a risk associated that you could potentially have a higher rate in the future. But it's a great product for a lot of people who maybe, let's say, you're not going to own a house for all 30 years. What if you're only going to own a house for 5 years?
So if you're fixing it up, yeah.
Exactly. So maybe take advantage of a lower interest rate in the beginning, and then before it even adjusts, you're already going to have sold that house, or you plan to refinance anyway. So a lot of our clients these days are inquiring about ARMs and seeing, because if you can save a little bit of interest for the first year, 2, 3, 4, whatever, that might be worth it to them because they plan to refinance anyways when rates come down.
So I didn't know that ARMs are refinanceable.
Yeah.
Okay, so you can refinance a fixed or an ARM.
100%.
I've just encountered so many people that are scared of ARMs. So
Yeah, they're mainly scared because they're worried about like rates shooting up like crazy and them not being able to control that because their monthly payment will adjust. But there's also safeguards within our adjustable rate mortgages where there's a cap for the year of how high rates can go up and for the period of time where the loan is remaining. So there's a lifetime cap of like, let's say 5% increase over the 30 years, and maybe a 1% cap where how much it can increase per year. So that means that if your rate starts at 5% and there's a 1-year annual cap and a 5-year lifetime cap, that means it can never go higher than 1% every year. So the first year it's going to adjust.
Okay.
It can only go up to 6%. It can't go up to 10%.
okay.
And they put those in place because they don't want people to be put in a position where their monthly payment is going up double overnight.
Yes.
The adjustable rates are not predatory lending or anything like that. They're just rates that have more risk to them than fixed rates because you get the benefit up front of lower payments.
So what is predatory lending?
It's a good question.
What is considered predatory lending?
So predatory lending could be essentially if there was no caps, or if it was 1-year adjustable rate mortgage and there was no caps associated, or maybe without paying attention to the terms, that could be considered predatory terms where there was no limit to what the monthly payment could be. So maybe if rates went crazy, rates went very high, you already have the mortgage, already have the house, you can't choose to not buy because you've already bought, and then your rate could go from 5% to 10%, let's say, in which case that might not be affordable for you. Or in other cases, it might not be associated with the rate. There might be some penalties or some fees associated with them that are added into the mortgage, like origination points or something like that. So in conventional lending, there is a cap for how much you can charge in closing costs without it being out of compliance, right? That cap is usually 3%. So all the fees that a lender charges and all the costs to obtain a loan cannot be higher than 3%. If they are, it's not a compliant loan, and then if it goes above 3%, it could be called predatory lending, essentially. So if a hard money lender, for example, is charging like 8 points to do a loan, they can do that because it's private money, but that can be probably considered under the umbrella term of inconsistent or unethical or potentially predatory lending. But the good part is 90% of loans are usually conventional, or even if non-QM loans, all of them have these safeguards already built in to ensure that you're not entering into an agreement that you're not fully aware of what the repercussions could be.
Okay.
Switching gears a little bit, can we talk about, you've been doing real estate for 3, 4 years, 5 years. What's been a transaction that's really been enjoyable for you, that's really stood out as potentially your favorite transaction? But if it's hard to pick a favorite, maybe something that you've really loved being a part of, that's either because it was a large transaction or because it was just an emotional one, or something that you're really proud of having gone through.
A majority of my transactions are all emotional because I'm emotional for all my transactions.
Okay.
I would say one of my favorite transactions was one that my broker told me I couldn't sell, and I did sell it either way because I knew it would sell. So it was a 4-bedroom condo. It was listed before, and I actually listed it $300,000 higher than what it was previously listed at. But I knew that there was barely anything in that zip code on the market. There was only 2 other listings under $2 million that were 4-bedroom condos. So I saw that was a filter, and we got it under contract within the first month, and we closed. The sellers were going through something personal, and they really needed to get rid of their property, and who would have thought that listing it higher with someone else that's more of a miracle story.
Let me unpack this a little bit. The reason why this transaction was stood out to you is because you proved somebody wrong, your broker, and you were able to sell a property that was previously listed
$300,000 less than what I listed it at.
So let's unpack that. So why did your broker think you couldn't sell it, and how were you able to sell it for that much more?
My broker thought with common sense. I mean, anybody would think the same. There's no way you can sell that, Sabrina. You're gonna list it $300,000 more than what it was previously listed at for 6 months.
Okay, understood.
And I'm like, I have a feeling that she just didn't get to everybody that inquired, because there's people that really do that, and you should get back to every single person with at least a text. You don't have to physically answer every single phone call because that's time consuming, but you should at the minimum answer, hey, how can I help you? What were you calling about?
Yeah. So do you think that was the main reason why you were much more...
I think I might have been a little bit more attentive to what's important.
Yeah. I think there's more to the story, though, as to how you're able to accomplish that. I think you probably did a better job of presenting the opportunity with something like that, because you're mentioning that it was a very small, I guess, sample size of properties that fit that description, right?
Yes. It's like a filter within itself. 3 to 4 bedroom condos, there's a very limited amount. They usually don't pass 2 bedrooms.
So aside from you being able to communicate more effectively, what did you do differently to be able to take a property that was listed for 6 months and sell it at a premium?
I, of course, redid the photography. We did a drone video, we had a walkthrough video, made everything a little more vibrant, focused on the view of the ocean. But the pictures before were also very nice. That's what I did differently off the bat. I did one open house. The open house had you can't really do an explicit open house in a condominium, but you can try. And I tried, so that actually did help because more people were open to coming inside the place. What else? It was really the being attentive that not a lot of people are, and owners don't have the time, sellers don't have the time to be as attentive to people that inquire, or else they would literally sell it themselves because they probably have a job, they probably have a business, they probably have kids, they probably don't have the time to. The most important part of a realtor's job or anybody in sales is to effectively and efficiently communicate. That's what you're hired to do. It's not so much about the showing or the this or no, it's about communicating. Am I right? Am I wrong?
You're 100% right.
Okay.
I mean, what you're saying is you were just basically a better listing agent. You understood what needed to be done, and you were able to market the property more effectively, communicate more effectively, things like that. So what would you say to somebody who is in your previous seller's shoes, where they're working with a listing agent that has had a property listed for quite some time, and there's not much activity, they don't see light in the tunnel, what would you give them as advice, or give them a little bit of relief as to how to navigate that situation?
I think a lot of sellers are frustrated right now. So I wouldn't put the blame on the listing agent. I wouldn't throw anybody under the bus. But I think I would advise the seller to see what the neighbors are selling at, see what has sold besides what is for sale, because something could be for sale for the longest time, but what is the average closing price by the square foot? Drop it to that bracket, that range, or under that value if you urgently want to sell. The pictures, I've seen sometimes properties over $1 million with cell phone pictures and a reflection of the person being seen through their mobile phone through a mirror. Like, that can't be on a listing. Like, professional photography at least, and hopefully it sells.
That's a great point.
It all depends on the market. It depends on features that your property has too. If there's no association, of course it's going to be more desirable to anybody. You don't have many restrictions as to what loans you can accept. Does your property have a pool or not? Because pool homes sell for $100,000 to $200,000 more than homes without a pool, and they're easier to sell and they're quicker on the market. Little factors like that people need to take into consideration. Of course, the updates. But with those updates, if there's only so much you can flip, right? So it's not always the updates that make or break the sale of somebody's property.
Yeah. So I think, going back to the question, sellers are frustrated, and what kind of relief can we give them? I think number one is going to be making sure that your property is effectively marketed. That starts from the pictures, that starts from the video, that starts from the way the listing is drafted and created. That's baseline, most important factor.
Yeah.
Number two is going to be making sure your agent is effectively communicating with all interested or potentially interested parties, because they don't want to leave anything on the table that could be potentially a buyer that actually closes on that. And more often than not, the buyer could be sitting in that pool of unanswered text or phone calls, and it's your agent's responsibility and obligation to you to make sure that they're squeezing every single opportunity out. So I think, how does somebody ensure that the listing agent is going to meet those parameters? Aside from just working with Sabrina.
I'd be honored. It's also the activity of the market itself. We can't always blame the person's property. We can't always blame the listing agent. We can't blame a crazy seller. If people are generally shopping a little less around, then you have to be, more than anything, aggressively priced and beautifully photographed. And also very available. Is your home available to show? Because the buyer that's active looking for properties, they're gonna want to see it at least within the 2 days that they originally requested, because a lot of people fly here to see places. They have to fly back home. They're not like, that's great that, I don't know, somebody's on vacation, but you need to open that door. So sometimes it being vacant is better. Like, properties can always be vacant because sometimes people need to close in order to move, but try to at least have maybe a time frame of from 5 to 7 p.m. on the weekdays, and then from 12 to 3 p.m. on the weekends. Those are the time brackets that people are usually shopping and seeing places in person, and if you make those time frames available weekly and accommodate to the buyer's time, it should sell if everything is within reason.
Yeah.
So you just added two more factors. It was not just to get the property marketed properly or to be communicative. It's also about to be available and to be very aware of and be realistic of the price.
Market.
Because a lot of times, if all three of those things are in check, but the price isn't right, that could really be detrimental to the listing, and it could prevent a lot of qualified buyers from being interested in that property, and it might make them just skip right over it. And eventually, over time, as you lower the price, it's not the same as starting off with a certain price. Starting off at 1.5 and ending up at 1.2 is not the same as starting at 1.2, right? Because people are gonna not maybe pay attention to something that's overpriced, and when something sits on the market, the days on market statistic is something that a lot of people look into. why has this property been on the market for 6 months? What's wrong with it? What's going on? So maybe sometimes some good advice for listing agents or for sellers in general is be very aware of where you're listing at, because it's not always about where you want to end up. It's also about where you start, and that could impact where you end up too, right?
Yes.
Yeah. Cool. Awesome. I think that's pretty good.
Did we do a good job?
Good job. High five.